Just read this question. Let's solve this.
Okay.
Yeah.
Yeah.
So the directors of X are comparing some of the company's year-end statistics with those of Y. So here comparative analysis between X and Y is going on.
Okay.
Company's main competitor. So the X is the one which the directors are comparing with Y. So X has a fairly normal year in terms of profit, but latest profits of Y have been severely reduced by exceptional loss arising from closure of an unsuccessful division. So there was unsuccessful company, when the word unsuccessful comes, there's a loss, it can be assumed.
Yeah.
Y has a considerably higher level of financial gearing than X. What do you mean by financial gearing? They have
Debt
taken
or
more debts.
equity.
Am I right?
Yeah. Yeah.
So share price, you can see 450 cents, 525 cents, higher share price. Probably because the sentiments of these the maybe the returns in Y company, maybe the people estimated would be high, and the P ratio is high here. Am I right?
Yeah.
P ratio shows the future prospects in a company. Even though the year has not been good, but future prospects seem to be bright because of a higher P ratio when compared to this. When there's a higher P ratio, it's an indicator that the share price would be high because numerator of the P ratio is your share price, correct?
Yes.
So this would have been high. That's the reason why this is high and this is high. It's an indicator that future will be good, and that's the reason why people are piling up and want to buy more and more shares of Y, stocks of Y. So higher price. It is building up the demand. Okay,
Okay.
pushing the demand upwards, the price upwards. Sorry. So this is the statistics. Now the yield price earning ratio, we have seen dividend yield ratio here. The dividend yield is less, here it is high. That means our market price you are earning less here. Here on market price you are earning more. Nominal value, they started with this, the stock value, and they started with this. So maybe the valuation will be high for this company. You know how to find out the share value.
Share value? No.
See, there will be this is the balance sheet. This total of assets here till here it's liabilities. So total of assets minus liabilities will give you net asset value, correct?
Yes, sir.
So you are selling these to the people. This holding to people, correct?
Mm.
See, if you buy a car, the car's cost is 10 lakhs. You
Okay.
pay 2 lakhs ka down payment, 8 lakhs is what your debt. This is your what?
Equity. Okay. Yeah. Got it.
Net asset value, correct?
Yeah.
10 lakhs minus 8 lakhs. So whatever it is divided by the outstanding shares will give you per share value. So that seems to be on higher side for this. The assets are highly valued in this company, maybe.
Yeah.
Okay. Hmm. So they're asking you to discuss on all these aspects. Let's see. Can you explain me the first, second one? I've already given you a rough idea.
Yeah. So the P ratio, it's
Just synopsis. I don't want any. Just read it and give me a synopsis.
okay.
So okay, fine.
Okay, it's
P
a
ratio
market.
already I've shown you, and measures the relationship between market price and EPS.
Yeah.
And here you can see why its calculation involves the use of share price, which is a reflection of market expectations. Of course, the share prices go high because of the demand and supply forces,
Yeah.
and based upon some news, what people are going to get, some acquisition, dividend declaration will definitely reduce the prices. Uh, they are going to get some good government contract. future performance is going to be good. So those are the estimations because of which the share prices go high, correct?
Yeah.
And even historical level of earnings also motivate people to buy more shares.
Yeah.
So why is this year is not good, which is not expected to be repeated again? Because the sentiments of the people show that because of the high P ratio, market price, the market will price the share on the basis of its expected future earnings. We are no one who can decide this is the value it is going to have. The market forces will decide. The more and more the people show demand to buy something, the prices will be high. Some things will be very strange. Sometimes we just are shocked. My god, this onion is so costly. Why? It is grown in my neighborhood even, but the demand for this is high, so the
Yeah.
so prices will be high, correct?
Yeah.
So earnings, because demand is high, because the supply is less. There are various factors. That is economics concept. Excuse
Yes.
me. Now, earnings figure used to calculate the ratio will be the historical figure, which is lower than the forecast for the future, and thus the ratio appears high. So what are they saying? The earnings figure used to calculate ratio is less. You know, if your numerator is high and your denominator is less,
Yeah.
that will be, that will again make the ratio higher, correct?
Yeah.
So that is what is happening. Financial gearing. You know, 1:1 is what you should maintain.
Yeah.
Fine. So can you just guide me what is that they're saying here?
You're just saying that, like, since the company has a high PE ratio, so it means that the company also has a low gearing ratio because it's vice versa. So the shareholders have a less risk when there's low gearing and they have a higher earnings.
Yeah. So
Yeah, since like this company Y company has high P ratio, so it has a low. That means it's more on like equity is more and the debt is less, so the interest charges will also be less for it.
yeah. So the high level of gearing means high ratio of debt to equity. This means that company carries a high fixed interest charge. That means that will reduce their profits, and thus the amount of earnings available to equity will be more variable, because you know high interest they have to pay uh, when compared to lowly geared company. Thus the shareholders will carry a higher level of risk in highly geared company than compared to lowly geared company. Correct?
Yeah.
So all things being correct now. So high risk in highly geared company and lowly geared company, the risk is less, and the shareholders will be demanding more returns in highly geared company when compared to lowly geared company.
Yeah.
So all things being equal, it is therefore likely that the share price in highly geared company will be lower than that in the lowly geared form. Why? Because people think it is more risky to invest in that. They are more debt ridden. They are having high debts. So better to just keep some distance. Fine.
Yeah.
See, now you'll ask me a question: why there's high risk, so high returns? See, when compared to risk takers, there are more number of people who are risk averse. Correct?
Yeah.
See, in your class, if 20 people go for a picnic, for example, only two or three will be the risk takers. Rest of the 18 will be, nahi, nahi, humko risk nahi lena hai, nahi, nahi, I don't want. Fine.
Correct. Yeah.
So for, I'm not speaking about those guys who are ready to take whatever risk they can. Those are adventurous guys. Speaking about rational man. So he would not like a company. He would not like to invest in a company which is very very risky. Fine,
Yeah.
because of the financial gearing, high gearing. So historical P ratios depend on the current share price and the historical level of earnings. So high P ratio. So we discussed about high P ratio. So I don't want to discuss again.
Yeah.
Go forward. So this is what the two things like this one and dividend yield. So now even if the shares have a nominal value, this nominal value is irrelevant. Why? Who cares? People only want to No, what is this?
Market share price.
Nominal value is what? I bought it for 100, you bought it for 100, the other guy got, everyone bought it for 100 for the first time. But
Yeah.
again, what did you bring it for? That matters, and what you bought it for and what you have right now earned out of it. That matters, correct?
Yeah.
So this can be proved by calculating the effect on the ratios of a share split. The ratios will be unchanged. Yeah, what is split? You have 10, you have one stock of $100 and you split it into 10 of $10 each. Does it make any difference?
No.
The market cap is the same, correct?
Yeah.
Thus, if all the factors such as accounting conventions are used in two firms are equal, a direct comparison of ratios is valid. Yeah, and again, see, if I want to compare a Apple company with British Petroleum, both should have the same kind of conventions and standards. Then ratios would be better to kind of like compare, correct?
Yeah.
In general, 99%, 95% things will be similar, 5% they may differ. They'll give different picture.
Okay.
You want to see, there is no match between these two companies, first of all. Okay.
Okay.
Apple is a different sector company, this is a different sector company, but we cannot say we cannot tell the mindset of an investor. He may compare these two and tell, I'll go with British Petroleum. Anything is possible.
Yeah.
He'll say crude oil, right now technological stocks are good. For example, there's no COVID-19 pandemic and everything is all right. So he'll say British Petroleum is doing well. I'll go for crude oil because crude oil demand is growing.
Yeah.
30 years back, people used to think like that, correct? Now
Yeah.
crude oil has suddenly lost the market. Why? Because we want to shift into EVs. Now comparison with RF, risk-free
Okay.
securities. United States Treasury bond is one of the like risk-free security. In UK also they may have some government bonds which are risk-free securities whereby there is no default risk. The government has never defaulted. In India we have National Savings Certificate, Public Provident Fund. Okay.
Yeah.
So dividend yield is the relationship between DPS and MPS. So market price of the share reflects investors' expectations about future level of earning growth, which we already discussed. If the
Yeah.
share is trading with a low dividend yield, this means investors have positive growth expectations after taking the level of risk into account. Why? Because if the market price is high, the denominator is high, that's good, na? They have
Yeah.
the share value is increasing, correct?
Yeah.
And low dividend yield, that means if, see, after paying the dividend the share price decreases, everyone knows this.
Hmm.
So if the dividend yield is low, that means if your denominator is high, that means the market price is high. That is what matters for you.
Yeah.
Dividends, okay, you get dividends, you can reinvest that. I'm not saying that dividends you're getting and you cannot reinvest. You can reinvest. Every year I get dividend first year, dividend second year, dividend third year, I can reinvest it in the market. Okay, but market forces can make the share price to go more higher than what returns I can get on this reinvestment, correct?
Yeah.
I may reinvest it at some 10% RFR, risk-free rate. But the market forces, demand and supply forces can give me capital appreciation for my stock to a very high extent. That can also happen. Now, this means that investors have positive growth expectations about after taking the level of risk into account. Although government bonds carry little risk, they are usually to offer significant growth potential either. Yes, when compared to risk-free securities, if you are taking a risky security, you will get more returns, but risk-free securities give you certain returns. Here, the certainty is not there. Hello?
Yes, sir.
What do you mean by certainty? 100% you are not confirmed that you'll get returns on this. But for government bonds, if you take treasury bonds and all, you will surely get dividends from the, you will surely get interest, or because we are speaking about bonds now, they'll
Yeah.
surely give you interest. Treasury bonds will surely give you interest.
Okay. So can we
So,
say that bonds are like an exception in the like in the securities category?
see, not all the bonds. There are some corporate bonds. Those are also risky because company defaults. Company can default now if it is in losses.
Yeah.
See, if it's a asset backed security, that means there is some asset backup to this security, and there is some trustee between you and the company who is charge of these securities.
Yeah.
What happens? This company I being the investor, directly don't trust this company.
Hmm.
So company knows that creditors, the people from whom we are borrowing, they will not trust us. So they form a trust and transfer all the assets of the company to this trust. They
Okay.
appoint a trustee for this legally, and the assets of this company are converted. These are all illiquid assets, correct?
Yeah.
These illiquid assets are converted to liquid assets. Liquid
Yeah.
asset, liquids like securities. I am saying securities.
Yeah.
I can tell them as bonds. This process is called securitization.
Okay.
You want to learn more about this?
Sure.
I'll give you a video of mine. Please go
Okay.
through that.
Yeah.
So this securitization process, then what happens? The bonds. See, if you take a note on that, the signature of the governor you find, correct.
Yeah.
So that is the value, because governor is promising that I will pay you 100 rupees for this. This is the value I'm ready to pay to you. So that
Okay.
bond is also a paper. It's a contract between you and the company. It's a security. Why? Because it's a proof that company has taken money from you and company has given a asset backup to you. That if I don't pay you, you sell my assets and take the money. That means trustee will do it for you. Correct.
Okay. Yeah.
For example, there is a bank and you go to bank, you give your security to them, and they lend you money. So here again, they gave you, they lend you money like that, or they took some security from you.
They'll take the security. Yeah.
Of course they will take a collateral. In the same way, when company wants to borrow money from you, you'll also ask a collateral. Same thing.
Yeah.
The only difference is here the company, here the bank, here you are giving the security to bank and taking the money. Their company is giving you security and taking money from you. That's it.
Okay.
You know repo.
Yeah. Repo rate. Yeah.
This is repo. This is reverse repo.
Okay. Yeah.
Repurchase agreement. That's it.
Got it.
Yeah. So now we're done with all this. Yeah, government bonds carry very less risk. They are unlikely to offer, they won't give you any growth potential. Just they'll give you certain returns. हाँ भाई ये फिक्स है, ये लेके आप आपको हम इतना दे देंगे. But in companies you can expect the growth potential. Correct. That's the reason why people go for equity. They go for
Yeah.
stocks. And this means that the share will still be more attractive even after low dividend yield has been taken into account. Even though less dividends we get, but shares are more attractive to the investors. Why? Because we are hungry for returns. Correct.
Yeah.
Let's come down to this managerial reward schemes. See, you being a manager of a company, you will be rewarded for what?
Um, for
For your
my
good decision making.
yeah
Okay. For your skills,
leadership skills.
leadership qualities, XYZ. So we
Yeah.
will give you good benefits. We'll go for performance related pay. Good
Yeah.
performance, good pay. Positive correlation. If you perform less, they give you less money. That's it. Either we make you a director in the company. That means we make you a shareholder also by ESOP, employee stock option plans.
Yeah.
Same thing. See, beneficial. See, if I give you those benefits, good benefits, that will motivate you, correct? You
Yeah.
will be again trying to give your better performance. Fine.
Yes.
And that is also good for the company, because if your decision making is right, you get a good compensation for that. You're compensated for that. If your decisions are not good, then if you are paying you a higher amount, that is not on a good that is not a win situation for the company. Fine. So that is the reason why we go for performance related pay. We give you everything, all the rewards, but only if you do good performance.
Yeah.
If bad performance and even we pay you high, that's a loss for the company. Correct.
Oh, yeah.
These are theory, you can read them. What I
Okay.
said you, the same thing you'll understand in this. Fine.
Okay.
Mm, yeah. Then comes the regulatory requirements. The achievement of stakeholder objectives can be enforced using regulatory requirements as a corporate governance codes. See, there is a company here, company A, company B. This is a very good performer. It's earning very high profits. Company B earns somewhat less profits than this. It's better to learn from scenarios rather than reading the theory, correct?
Yeah.
So now this company does everything for profits, nothing for employee benefits, nothing for the society, no user friendly products, no recyclable goods. They are polluting the environment, and they are polluting the water bodies. People are getting contaminated water where they are situated. All sorts of bad remarks, no good ratings, but profits are very high, and this vice versa. So which one you'll choose?
As a shareholder, I should go for higher profits.
But what is the trend in today's world? People want,
Sustainable.
the trend is changing. Fine,
Yeah.
trend is of course changing, because we Indians are even understanding, because we are exposed to the Western culture.
Yeah.
So what Americans think of what Americans have their mindset, ideology. We are watching Hollywood movies. We are seeing their all those things, like everything. We come to know what they are thinking, and see, today world has become a small place. Correct. Nine
Yeah.
hours you can fly to London. You can reach London. You can reach Australia in one fine day. But it used to take 6 months or 8 months to go. So today we know what's the mindset. So
Yeah.
sustainable and we are suffering because of this, these kind of companies, correct?
Correct.
Global warming. What Hyderabad has got the climate change in previous year. How was the rains in Hyderabad?
It was good. Now it's just all of a sudden
It was
anything.
good or it was horrible. Waterlogging and all everywhere. It was flooding.
Yeah. Yeah.
So what do you think? Such kind of
I,
rains are good, or the rains which where
no, no,
whereby
no.
this?
The flood
No,
you're
we
talking
want rains.
about.
We want rains. We want good rains. We want all the farmers to get good monsoon. But good monsoon is not equal to disastrous monsoon, correct?
Yeah.
There's a difference between this good and disaster. So now every time we lose billions of dollars or rupees in these all disasters and all because of these guys. They want to crush the forest. They want to damage the flora and fauna. They want to do all sorts of things for their profits. No, we don't want them. That's the reason why we have
Corporate governance.
corporate governance. See, government governs their citizens with laws, rules, regulations. In the same way, corporate sector has to be governed, and those the corporate sector can be governed because of this corporate governance codes. What do you think? What comes in this? All the compliances. Companies law have to be followed to run the organization. Industrial and labor laws have to be followed to run the organization. Don't cheat the labor. Don't exploit the labor. Don't cheat the customers. Consumers law should be come into picture. Tax laws, contract act, accounting standards, audit standards. Everything should be followed to run the organization. Correct?
Yeah.
Ethics. Fine. Then to give the remuneration, you have remuneration committee. That is as per the company's law. To nominate the directors, you have appointment of the administrative officers or managers. You have nomination committee,
Yeah.
and you should directors whomever you are appointing should have good skills and should be performance based directors, correct? And
Yeah.
then remuneration should not be given like that. Performance related pay should be given, and we will not decide directly autocratically. We don't have greater autonomy to a person should not be given. There should be decentralization in the organization, correct?
Yeah.
And more remuneration committee should decide how much remuneration should be given, not
Yeah.
from the no, like not by the vision will of an individual of the company. So all these things are the factors to be followed. See, I already gave you a very shortcut thing to understand. If you follow all the laws, there is corporate governance.
Yeah.
Okay. Risk management, internal control, very important for internal audit. I think audit subject, if you have done, you'll come, you definitely know this. Risk management today clubbed with audit. You know about risk management, risk
Yeah.
minimization, hedging the risk, that means reducing the risk. I told you about the insurance day before yesterday, how you can reduce your risk in one of the ways. These are
Yeah.
all the things should be seen in the company. Then it gives good, it brings a good name to the company, it gives good ratings to the companies, and these kind of companies are preferred by the new generation investors, correct?
Yeah.
Because we don't want our children to suffer in the future. If we exploit everything as on today, what will be there for them? If we do
Yeah.
some illegal mining today, like suppose see what happened to the Reddy brothers. I don't know, you were in school, I think, those days. When we were in college or some days, we used to listen about the illegal mining in this Obulapuram mines near Karnataka. There is
Okay.
some these people called Reddy brothers. What they used to do? They used to do illegal mining. That means you are given a permission to just extract, suppose 1 ton in a day. They used to extract 100 tons in a day
Oh.
illegally. All those scams was happening. They have the gold plated dining table. They used to eat in gold utensils, drink in your gold utensils. He used to fly from his town to Bengaluru for only for dosa, personal helicopter. That was the life they were enjoying because of this illegal mining. Now who is suffering? What will happen with this all illegal mining?
It'll exploit like pollution and
Of course, what happened in Kerala, such kind of floods came because there
yeah.
is no base in the landmass. All has been extracted, and this is what for mining they crush the trees and do all sorts of activities, illegal activities. That's the reason why we should not prefer such kind of companies, and these guys are giving much more importance to governance.
Okay.
Then comes the stock exchange listing regulations. You will invest in a quoted company or listed company or unlisted company.
A listed company.
I would say go for unlisted also, no problem. Until and unless you are sure about the company. Okay. If
Yeah.
you are sure, you have done your research, you are pretty much sure कि हाँ भाई ये company is good, go for it, no problem. You have done your due diligence. But listed company not required that much of due diligence because everything is there in the public domain. From the stock exchange commission's website, you can get every detail of the company. Okay.
Yeah.
So that's the reason why people go for listed companies and invest their money. Be safe. Why you should have all sorts of ache in your head when you can get a detail from the exchange that yeah, this is a good company, from the stock exchange website that yeah, it's a good company. Why? Because listing requirements are such that you have to show everything, you have to reveal everything. Okay.
Yeah.
So I will not go into the details of listing requirements. That is a company law subject. That is there in your F4. It's not required right now because we're doing financial management.
Okay.
There are not only the profit organizations which are existing. There are some non-for-profit organizations even which which have only one motive, to give
Social
service to
responsibility.
people. Service without profit motives. That is what their motive is. But now you will see, if I make a account of these guys, income expenditure account, I see they are also earning some surplus. Then what for you are saying that they are non-profit organization? I am not saying that they shouldn't earn and they shouldn't account. They should also account. They should, because people donate their money in these organizations. People
Yeah.
should know what is happening, how the things are going on. There is no scam in these organizations, etc. And with this surplus, they'll try to come out with more services. They'll try to expand their services. Correct.
Yeah.
You go to a private hospital, they're charging 500 rupees to check a patient. You go to a trust hospital, 100 rupees still now. So in India, can you think many people can afford this?
No.
That's what. Please go for this Oxfam case study. We'll go further. You have to tell me what is happening there.
The Oxfam operates around 750 shops in Britain, and these operate at a profit. Uh, and the Royal Society for the Protection of Bird owns and operates an internet and mail order trading company which operates profitably and effectively. So both of them operate for profit only.
What is happening? I just want a synopsis. Just up एक बार इसको like just read it and just give me a synopsis, a summary. What is happening here?
Okay, so the Oxfam it just earns 750 shops, and whereas the Royal Society it operates in internet and mail order trading. So they using the profit basically for the protection of the birds.
हाँ.
So the
Sorry.
Oxfam is just
Again,
using the
please.
profit for its own personal use, and whereas the Royal Society it provides a service with like nature
Without
or
any profit motive. That's it.
yeah.
So objectives, I've already said you that these guys want to maximize surplus, maximize revenue only for the society again.
Yeah.
Maximum utilization of resources, reaching the targets and budgets. They should try to make good budgets and try to like satisfying the wants of the staff and volunteers and client satisfaction maximization. Then again, what is value for money? I'll say triple E should be there for value of money. That is economy, effectiveness, and efficiency. I'll take a Maruti Suzuki car. What car you have? What car you use?
Alto.
Alto. Okay, fine. See, my motive was to ask you about like if you have a Maruti Suzuki car and if it is like coincidentally there with you, you'll understand what I mean to say. If it is not there, well and good, no problem. Okay, that's fine because I had a car till previous year. I sold it.
Yeah.
क्या करेंगे कार रख के? All these lockdowns and this, I had a Ciaz car. I sold it immediately. I used it for 5 years, but I said अभी use नहीं है, निकालो. So you have a Alto, and
Yeah.
this is a very good example which we can take. How I can take this? Alto is economical. Is it economical or not?
Yeah, you can say.
You are spending your money and getting maximum benefits, and you
Yeah.
have spent very less to buy this car. It gives a good facility to you. It is a
Yeah.
air conditioned car. It has ample space. You are
Yes.
comfortably going and coming. Okay, fine.
Yeah.
Efficiency. It is very efficient. Fuel efficient. Yes.
Yeah.
Alto gives a good mileage.
Yeah.
Effective? Of course, effective. The same air conditioner it has, the same air conditioner other cars even have. I find
Yeah.
it very comfortable when I sit in Alto.
Yeah.
It has all the three E, E, E. It is economical, yes. Very, it is user friendly. It is less maintenance. It is maintenance free car. So I
Yeah.
say economy. It is efficient, very much efficient. Effective, yes. I go
Yeah.
1,000 kilometer and I find it okay. I don't get. See, we go 1,000 kilometers. बोलते we go with some breaks here with breaks, na. We
Yeah.
don't do a 1,000 kilometer journey like that. So I find it very effective, man. I'm just enjoying my drive in this. So that is what you have in Alto. Finished. So let's come to the performance measure. Do you think performance is same for everyone in the world?
No, it's
You are a
different.
student. So Isha is a student. So for Isha, is it that she is it is profit earning is a performance measure for Isha?
Not right now.
Not right now, yes, because you're not a business. You're not
I'm a
a
student.
you're not into
Yeah.
business. You're not a businesswoman. Fine.
Yeah.
You're a student. So for student, getting good scores, performing well in the examination is good.
Yeah.
Teacher, we are not entrepreneurs. I'm not Byju's. Okay,
Yeah.
I'm a teacher. Since I'm a teacher, my student score, my student, I'm charging for my services. I don't ever have some organization like Byju's and have some fixed expenses to pay to all people. I have a normal academy. Me and my wife runs it. We are happy with what students we get. We are ready. We are happily training them. We want their results. That is what we understand our performance as. Okay.
Okay.
A student has homework. If he does homework, that's good for him. Good scores is good for him. And for a businessman, profits. Everyone has their own performances. In that context, let's come to the policeman. Policeman has what? How many thieves he catches? That is his performance. Correct.
Yeah.
So now we will try to see how the police is performing in this. So with some inputs and some outputs. You give input, you get output, correct?
Okay.
So time, we are taking three factors: time, miles, arrests, and the cost, cost factor. Okay. So we'll
Yeah.
see horizontal and vertically. First, let us see the cost factor. This is what the cost we are incurring. For
Yeah.
example, I checked it with hours. So for catching the criminals, okay,
Yeah.
two policemen travel this many miles and they do this many arrests. So we are seeing here. So suppose 40,000 is the cost they are incurring and 4,000 hours here. One of the inputs. What is that?
4,000 hours.
One of the inputs. These are the inputs. We'll see the output. So
Okay.
if 40,000 is what I'm incurring and working for 4,000 hours, how much per hour we are spending?
$10 per hour.
If 8,000 miles we are traveling, how much per mile we are incurring?
$5 per
If
hour.
200 arrests we are doing, how many dollars per arrest?
200 per hour.
In the same way, you can look in this way. Time, 4,000 hours divided by 40,000, because what is the base that has to be taken in the numerator, correct?
Yeah.
For you here, you are giving time as importance. Here you gave money as importance. What you give as importance, you give importance to what will come in the numerator, correct?
Yeah.
So here hours are important for us. We are giving importance to that. Divide by this, we get $1 spent for 6 minutes of patrolling.
Okay.
Okay,
Yeah.
how you got this?
Yeah.
Now,
8,000.
yeah, hours like 60 minutes. 60 minutes is 1 hour, and in that way we calculate.
Yeah.
And here 0.2 of a mile per $1, and here one arrest per $200. In the same way, here 2 miles patrolled per hour, and here 20 hours for one arrest. Here half hour to patrol 1 mile and 20 hours per arrest, and 40 miles per arrest, and 41 arrest for 40 miles. If you can correlate, you check, see, here it is 20, here it is 20,
Yeah.
40, 40.
Okay.
Okay, one arrest every 40 miles or 40 miles per arrest,
Mm.
and 200 per arrest. Here also, like you see, one arrest for $200. So it's
Yeah.
like you can correlate them, correct?
Yeah.
These are the performance metric measures to check the policeman's performance in all different ways
Okay.
and different scenarios. So I think I am left over only with one topic. No, one more session is required. So one more session is equivalent to finishing this chapter. Okay.
Okay. Yes. Sir.
So probably if I am not having any sessions tomorrow, I will try to take your class. Okay,
Yeah.
Isha? I'll
Yeah. No.
inform you early in the morning. Meanwhile,
Okay.
please watch those two videos and inform me. I'll give you more two videos.
Yeah. Yeah. I'll do it.
So simultaneously, we have to finish this. Next session is the last session for this chapter,
Okay.
and immediately we can jump to the chapter number 2.
Okay. Fine.
Okay, Isha. Thank you.
Yeah.